Alright. Alright, so this Zoom call is just gonna be a quick little Q&A. I'll be showing you guys what I'm seeing for the next coming week. You know, as the markets do open on Sunday, 5 p.m. for me. So I'm just gonna be going over a quick little in-depth, view of what I'm seeing for the week. So can you guys see my screen? In the chat, right? I don't know, use your mic or something. Just let me know if you guys can see my screen. Thank you, thank you. I'm happy you're finding the course valuable. So right here, this is what I use to journal my trades. It's called OneNote. If you have a laptop on Google, or sorry, a laptop for Windows, you guys should have it. Just type in OneNote, and this is the way I have it structured. So I have trades for the week, right, and then I have my little pair, whether I'm buys or sells on it, and then the before analysis, and then the after analysis. So for GJ, let's look at the before analysis before we get into this. So let's click this really quickly. Alright, bet. So for GJ, obviously I'm extremely sells on this for the time being. Now we can see that right over here we have this leftover, liquidity. We'll get into the charts and explain everything really quickly, but we can see that we do have a lot of liquidity resting over here that eventually the market will end up having to, take out, because like we talked about in the course, liquidity is like a magnet. Now some people did get induced to take a buy position right over here. We can see that the market did wick down, tap into this institutional candle, and it did give you some decent intraday opportunities for that buy. But a liquidity is much more stronger, right? So liquidity is stronger than an order block. So if there's liquidity right here, but there's also an institutional candle right beside it, in my school of thought, in my own opinion, the market will always end up taking out and attacking that liquidity, because liquidity is like stop losses and money. The market can't go up if there's a bunch of money being stacked around. So basically what I'm seeing for GG is price has to fall to take out these liquidities, and before it does do that, I'm expecting price to retrace into this 4H institutional candle. Let's go over this in depthly on GBP JPY right now real quickly. So this is generally what I'm seeing as a long term, but I'll delete everything, we'll go over this together. So from an institutional market cycle, we can see this is our first expansion, and then we have this little manipulation move right over here, which I'll highlight in I'll just quickly move that, highlight this in red. So we have our expansion, we have our manipulation, and then we have our second re-expansion back up. Now we all know that the market comes back to test the original open of where the expansion first started. That's just how we trade. That's a simple, easy way of understanding it. And the market already tested this institutional candle right over here, and we expanded towards the upside. Now, like we said, because this is our manipulation zone, the market's gonna have to tank and take out all these stop losses. Now, if we're looking at this from a support resistance perspective, we can see that there's all this support over here that the market's gonna have to end up taking out. All these retail traders are looking at this level and thinking about getting involved for opportunities. But because we're smart money traders, we're looking for this area over here to get broken, and then from there we can possibly look for those sell side continuation towards the downside. Now before we do look for those sells, let's actually analyze the structure. Now if we're looking at the daily time frame, structure is still extremely bullish. All right, structure is still bullish, but because we know that the market has to go down to take out all this liquidity, now we have a reason for why price needs to go down. That's the number one thing. You need to break price down. You got to understand the story that the market is telling you. The first part of the story that I'm starting to understand is that there's liquidity here, meaning that price has to go down. Now if price is going to go down below a level of liquidity, like I said in the course, look for the expansion that caused that major impulsive move right here. This is the expansion up. If I go down to the 4-hour, we can see that there's a clean institutional candle right over here. So most likely price is going to be attracted to go towards this institutional candle, because there is liquidity over here, which means price does have a reason why it needs to go down. But it's not like price is just going to randomly go down, take out the money, and then randomly go up, right? There's objective, there's cause and effect. So because we know that there's liquidity here, we also need to have a reason for why price needs to go down, and that reason is this institutional candle right here that's untested, and we have that major impulsive move up right here. Now we already went over why we're not looking to set or buy over here, because there's liquidity. So rather, let's look at the long-term aspects of this. Long-term aspect, GJ has to fall down. It's just the that's the way GJ moves. We can see from the left that the market does create these major deep pullbacks for about this one was 400 pips, this one was another 431 pips. If we're looking at from here, we can assume that this would be another, 300, 400 pip retracement back down. So overall, this all makes sense and it aligns up with the overall pullback and, institutional market cycle. Now, for sells, what we're expecting is price is overall moving down now. We can see that from a micro perspective, we do have all this bearish structure that the market is creating, right? So we had this previous low right over here. The market did end up taking it out. And when it did end up taking it out, price ended up retracing into a smaller time frame institutional candle like right over here. And then the market fell once again. Now, the market tested this institutional candle right over here. This last impulsive bullish move up before that major move down. And then price retested that institutional candle and then fell off. Now, one thing that I noticed is this impulsive move down right over here. Remember, we're looking at this from an institutional perspective. So let's highlight the major impulsive move down. This is an impulsive move down. This is the retracement back up. So let's make this purple. And then once again, this is another impulsive move back down. Let's make this blue. And then this is another retracement back up. Right? Or technically you could kind of say this is all manipulation in some type of way or some type of form, but overall we can see that the market is slowly showing us bearish signals and showing us bearish structure now. So we know that there's liquidity over here. We can easily see these equal highs from a mile away. We can see that. We all know that the market is going to have to eventually come up to take out these stop losses. Now, one more thing is that we have imbalance inside of our zone of interest, which is we're focusing on this zone of interest right here. The open of that major impulsive move down that gave us that continuation of structure towards the downside. Right? We have that COS bottom because we have this previous low. The market ended up taking it out and creating a new lower low. So that basically gives us a continuation of structure, which gives this area of interest that we have this slash up candle before the move down a lot more reasons for price to come back up. Now, not only that, but we also have a lot of imbalance right over here. If we take our IPA tool, I'm doing it from this wick. So this is careful. Be careful about this. I'm doing it from this wick down to this wick. Now, it did get mitigated a little bit, so I'd be doing it to this wick right here. So that means that we have imbalance right over here inside of our major impulsive move down. Now, if I highlighted my major, up candle right here, obviously I can't take it like this. This is way too big of a zone. It's not nice. I'm gonna have to refine this obviously. So from here I'd be going down to the 3 hour and I'd be going down to every single time frame, just refining this until I see a clean IC, which is an institutional candle. So right here, now we can get a better idea. We can see a really clean institutional candle right here, this last major up candle before the move down. So we refined this from about 27 pips up to 13 pips. Now let's keep refining this. 13-minute time frame, you can maybe take it from the entire wick top, and this, now you're just refining it up to above 17 pips. But this is the thing, even though that before it was 13 pips and now it's 17 pips, you still got to keep in mind that you're getting in a better entry. Before, our entry was over here, something like that. Now our stop loss is in a more safe and careful position, and our entry is a little bit better, but we are risking like a couple pips more. How do you define IPA regarding time frames? Okay, so imbalance regarding time frames, it's all over the time frame. It's all over every single time frame. Now, the best way to find it is on the higher time frames, such as the 4 hour and the 1 hour. The reason I say this is because we all know that the higher time frames give us a more idea of where price is going to be going, right? So, for example, a 4H big impulsive move up is way more stronger than a 1H, big impulsive move up. For example, if we're looking at this big 4H level right here, we would obviously see that this level right here has a ton of momentum. Now, if we go down to the 5-minute time frame, look at this. We have another big level of momentum, big push towards the upside. But if you compare that to the 4H, it doesn't even compare. The 4H is obviously way more stronger. So it's the same exact concept with imbalance. We're generally finding our imbalances on the higher time frames and expecting it to come to our points of interest. Is there not liquidity above that OB you just marked up? Not really, right? You can kind of see, it's not really clean, right? If you go down to the 1 hour time frame, it's not really clean. We did have some liquidity over here at one point, but as you can see, the market ended up taking it out with this wick. And other than that, there's no other, double top, double bottom, not much. Now over here, this is different. This is clean liquidity. We have one touch of resistance, and then we have another touch of resistance right here. Trade outs. Yeah, I know. Well, let's go back to the trade. So yeah, so we have our institutional candle. I think we had the 45. Yeah, so we refined it up to this 45 institutional candle, and our entry is just gonna be over here. Now, one thing that's really interesting is that we have imbalance inside of our institutional candle. So if we take our imbalance from here to here, we can see that we have imbalance right here, which gives price more of a reason of why it needs to go up. Now, we're not looking to enter on the 50% of this imbalance. This imbalance just tells us that price needs to come in to fill in that imbalance. Now, because we have an institutional candle, that one gave us a continuation of structure. Two, it gave us an imbalance. Three, it has a lot of momentum. Four, we also have our Fibonacci discounted price value. If we highlight it from the high to the low, we can see it's in our blue zone. So that's about 4 to 5 confirmations. If you look at the sessions, you can see this also happened in London session. So that's 6 confirmations. And then we have liquidity, which is 7 confirmations. So we have 7 confirmations for this trade alone. So if we were looking to enter on this, you could either enter with a limit if you are pretty impulsive, enter with a limit, which I don't recommend. Stop loss just at the high. And then TP could either be the next low, depending on if price, stops here, or you could target the next level of imbalance, or the next level of liquidity rather. So in this case, we could target, all this liquidity over here. Right, so just target all the way down here. Or if you're crazy like me, because me, I like to go for those, nice, crazy risk to reward, I would just target my next buy zone, which would be this institutional candle right here. So my original TP for sales would be all the way down here. And then from here, we'd be looking to buy price back up. So you could set an alert as well. Just right click this, add an alert. And as price comes into your, POI, you can look for, a smaller time frame confirmation. So for example, let's do a theoretical one. Let's say this is an accumulation, or rather distribution. As you see price come up into your POI, you're going to see this bullish structure obviously happening. Let's say this is our POI right here, and price just tapped into it. From here, all I would really look for is I would be looking for bearish structure to come in, because the best way to find out if your point of interest is correct or not is by identifying if price ends up reacting off of it or not. So in this case, price comes in. At this point, I would look for price reacting off of it and switching structure. So you can see that we did have this bullish structure, and as price did come into our point of interest, we end up, reversing. Okay, I'm just making sure I'm recording. I thought I wasn't. Well, we end up reversing, breaking a bunch of structure. And then what we'd be doing at that point is we'd focus on the open of that impulsive move down that broke a bunch of structure, and we'd set limits over there. So that's generally how, we are with our structures. So now that's basically GJ. We're expecting sells. Now let's go down to the next trade. So the next trade is Euro USD. This one is a clean one. Let me go to the charts right now, and we can take you guys through this. So Euro USD, let's look at this. It's clean structure. It's one of the, it's a really clean trade. So from here, we see this low, we see this high, we see this higher low, we see this higher high. We once again see another high low, we see another high high. Now from this point, the market ends up selling off with immense amount of bearish pressure. This move right here, it broke a previous higher low. Now this tells you that price is overall moving in a bearish direction now, because like I said, we once had this bullish moving market, but now price is overall, switching structure and moving lower. Now we saw that price broke structure. Now when it did break structure, like I said, focus on the open of the institutional candle and then look for that expansion down that broke structure. So this is the open of that expansion down, the cause, and as you can see, price ends up tapping into this institutional candle perfectly from here. Now from there, the market sold off obviously, and we didn't catch that, which is hindsight. But yeah, so from there, price breaks structure once again, and then we created this new low. Could this also be a lick grab, the one lower low? Oh, you mean this one? Technically speaking, you can consider it as a liquidity grab, but generally I don't consider anything as a liquidity grab unless there's like, equal lows, something like this happening. That I would consider as a liquidity grab, because there's equal lows resting right here, and then the market goes down. But if I see something like this happen where the market just breaks structure, I don't consider it as a liquidity grab. I just consider it as market shifting structure. Is my mic really low? Can you guys hear me fine? Okay, perfect. I think it's your laptop then. All right, let's continue this. So as we see in price broke structure, it's creating new lows. So for example, we created a new low right here, and price broke it with a lower low. So like I said, we have those continuations of structure. So now what we're gonna do is we're focusing on the open of those moves down that broke a ton of structure, right? So my bad. At this point, I'd go down to the 1 hour time frame, or I'd go down to every single time frame. Now, the way I marked the first institutional candle was just off the 4 hour. I marked it from this open to this right here, so the open to the high. Now, the reason we're focusing on this institutional candle is because this is the last institutional candle, or the last up candle before the move down that broke a ton of structure, and we also had that major expansion move down, correct? So not only that, but we also have IPA. Once again, we have a bunch of imbalance from here to here, and then from like here to here. So we have a bunch of imbalance, meaning price has a reason for why it needs to come back up to, you know, mitigate all that IPA. Now if we go down to the 1 hour, we can see that this move right over here is pretty significant. Let me tell you guys why. So technically speaking, we have two impulsive moves down. This is the first impulsive move down. This is that retracement back up. Let's make this red. And then this is that re-expansion back down. Make this thing again. So now it looks so much more cleaner. Like I said, because we're focusing on the open of those expansion moves down, this is one valid level. The second valid level would be right over, I refined this up to here. This last institutional up candle before the major move down. So right now we have two major levels of interest. One being this one and the second one being this one. Now you guys already know what we're doing. We're waiting for price to come to either one of these. Either we can enter with a limit for both, or we can look for a confirmation, which is what I prefer. And then from there, target wise is, you know, if we go down to the daily time frame, really we're just targeting the next pullback, and let me explain why. So we can see that the market, sorry, let's go to the weekly time frame actually, my bad. So weekly time frame wise, this is that last higher low that the market created. We have a high, higher low, higher high, higher low, and then we're expecting the market to continue with a higher high. Now because the market is overall bullish, it hasn't really been making crazy pullbacks, just about like, you know, 300 pip pullbacks and then a continuation. So if we do measure this 300 pip pullback, where does it lead to? Well, it leads up to this institutional candle right over here, this weekly institutional candle. So if we look at this on the daily perspective, we can see that price went up from here. We have this major impulsive move up, we have this retracement back down, and we have another major impulsive move back up, right? So we can see that this is the retracement, this is that second impulsive move up. At this point, we're just looking to target the next institutional candle on the daily, because if price is moving down, you said, is that an order block as well? Yeah, it is. I'll get into that. Because if price is moving down, it has a reason for why it's moving down, right? It's going down because it's retracing. But why is it retracing? It's retracing because price has to test or go lower, because if the market just continues going bullish, everyone's going to make money. Every retail trader is buying, and at the end of the day, the market is just going to continue going up, and it won't be good for any of us, right? So when we do see that the market is going up, at one point it's going to make a deep pullback. We all have to accept that. It's going to make a deep pullback. Now this deep pullback is just the market pulling back to another institutional candle so it can continue with this bullish move. Now let's look at this. The market created this, you know, low, lower high, lower low structure, and then the market pushes up, breaking structure. Now look at right here. We have this major lower high right here, and price ends up breaking above it with the candle. And what are we doing? Well, we're looking for those impulsive moves. This is the first impulsive move. This is the second impulsive move. And for both of these, we're looking for we're looking for the open of those impulsive moves towards the upside. In this case, the start of this major impulsive move started right here, and there's a daily institutional candle right over here. So our TP is where we're also going to be looking to buy, because once price taps into here, we want to see price come all the way back down into this daily institutional candle. And once price taps into that daily institutional candle, that's where we can look for taking that continuation for buys. Now, if the market comes down to here and it doesn't, you know, like this level, we can literally easily just move our POI to this last institutional down candle before the major move up, which is even better because this is deeper, right? And if we take our Fibonacci confluence, you can see that from here to here, this aligns up with our, you know, blue zone. So that's what I'm seeing for Euro USD, where risk sells on this. Everything makes sense? Do you guys have any questions? It all makes sense? If you guys have any questions, leave them in the comments right here, because this is like a day, you know, just a quick general Q&A understanding of market structure and everything. So if you guys have any confusions, just let me know. Make sense? All right, perfect. All right, so let's move on to the next one. The next one is Euro AUD, and this one, oh my god, guys, I want every single person to cash this. Everyone in this group chat, everyone in the Zoom call, I want every single person to cash this one. I'm really confident in this sell. It's crazy. I'll get into this right now. So daily Euro UAD on the daily time frame. Or no, let's actually start on the weekly time frame. Weekly time frame, we're bearish. You know, we can obviously price is moving down, right? We can easily see that. We don't even have to look at the weekly. We already know price is extremely bearish. So the weekly is bearish. Let's go down to the daily now. Now, daily time frame, we have this little, you know, movement up towards the upside where the price was choppily moving up, really consolidated, but it was still moving up, right? Now, it's not clean because this is all just one move. It's not clean. There's no clean structure. So let's go down to the 4-hour time frame. Now we have a lot more information that we can deal with. So look at this. We have a low right here, and then we have a high. We have a higher low, and then we have a higher high. We have a higher low, and then we have a higher high. So we can see this 1, 2, 3 structure is moving bullish. Now right over here, price randomly ends up selling off. Right here, price sells off, breaking a ton of structure. Let me actually delete this. I'll make this nicer. Price ends up selling off right over here, breaking past a previous higher low. Now this indicates a clean break of structure, right? And like I showed you guys on Euro USD, when price breaks structure, it comes back towards the open of that expansion move down and looks for that institutional candle. So from here, I went down to the every single time frame looking for a clean IC candle. I went on the 2-hour, couldn't find anything. I went down to the 1-hour, still couldn't find anything. And then I think it was on the 45, and I found one. So I found my first institutional candle right here. This is the last bullish move up before that move down. And then we have another one. We have another bullish move up and then move down. Now, someone might say, why didn't you take this one? Why didn't you take this one? Like I said, with my, you know, way of teaching and understanding smart money, I go for the candle that looks the cleanest. This is the cleanest one. You know, this is that last clean up candle before that major move down. Now, look at all that imbalance. Look at all that momentum. Look at all the momentum that was followed by after this, you know, by the sell move. So at this point, all we're doing is we're waiting for price to come back either up to this one or this one right here. Now, stop loss is just about 8 pips for this and 8.3 pips for this one, same stop loss. And TP, so with TP, you could either target the next high, the next low, for example. This would be the next impulsive low, right? Because we can see price created a ton of liquidity here. We have this double bottom that the retail traders are looking at as a level to buy. So obviously there's money over here, right? So we would be expecting to target the next level of liquidity. Now you don't need to target there. You could also target, like, you know, more intraday targets, such as, you know, over here, which would still be a good, like, 19 to 1. Yeah, 19 to 1. And TP would be 162 pips, but I'm more of a swing trader, so I would look for, you know, targeting the next level of liquidity, which would be all the way down here. Now that's Euro AUD. I hope you guys understood this one. Okay, so though sometimes I use wick, sometimes I use candle. So if there's more candle than wick, I'll take the body. So for example, right here we have a lot of body right here, right? The market created a really nice institutional candle. In this case, I would take the body. I would take the full body. Now when the market creates more wick than body, then I would take the entire wick to wick. So for example, right here we have a wick and we have body, so I take it from here to here. But if there's more body than wick, then I take the entire thing. Yeah, makes sense. All right, perfect. So I hope you guys understood this one. You know, your AUD is looking really clean for this week. Where would you take partials? Oh, nice question. I almost forgot. So really, when you're looking at the market, hold up. Boom. When you're looking at the market, you're expecting price to come into your POI and then sell off, right? So imagine this is real candles, market comes in. All I would do is I would take partials at the level where price moved up into my POI. So when price comes into my POI right here, and then it ends up going down, I would partial right over here. Literally right over here, I'd take partials. 50% of my position is going off, at least 50. And then from there, stop loss to break even, and everything else is, you know, is running. So let's move on to the next one. GU sell. Let's go to GU real quick. Oh shit. Alright, let me delete this. So GPUSD. I've seen I actually picked them. Oh, where did I learn this? We'll talk about it on a different day. How do you do that with candles. Is that an indicator? Nah, so you just go to here to the left and then go to ghost feed, and then you can do that right here. Yeah, so what do you guys say? After how many touches of an OB would you consider inbound? So one touch. So for example, let's look for an example. All right, right here we can see price created an institutional candle, tapped into it once. As soon as it taps into it once, it's invalid for me. So if we didn't buy over here, we're not looking to buy anymore, because look, price ends up falling down. So for me, it's only one touch in the IC candle, and then from there it's invalid. But let's look at GU. So GU structure wise, like holy, look at this major consolidative structure. It's just consolidating like crazy, right? And we all know what this is. We all know that this is the market, you know, showing us our first signs, creating liquidity of the lows and the highs, right? You know, showing us that the market is overall bearish now. But it does, no, I mean, this is the thing. It might still respect it. It could still respect it even after the second touch, but the probability, it's not there anymore. I'm trading in the terms of probability of which one is more higher probability. For example, it got tested once over here, but then look, the market broke the institutional candle. It broke it, right? So people who bought at this institutional candle, once again, you would have got stopped out, because most likely your stop loss is just going to be the close of the IC right here for about 10 pips, and look at how the market stops you out and then continues going bullish. So, you know, it just depends on every trader. But let's get into this before the Zoom ends, because I think the Zoom call ends after like 30 minutes. But overall, GU is consolidating right now. Now, if we look at structure wise, we can see we have a low, we have a high, we have a higher low, higher high, higher low, and then a higher high, right? So we're still moving extremely bullish on GU. Now, right over here, price ends up going down and doing what? It goes down and breaks structure right here. Let me do this right, BOS down. Now someone might say, okay, wait, I thought you said you only take the candle if the candle of the body closes below the wick. Well, look right here, we have that. The body right here closed below, so we have a really proper clean break of structure. So what this tells us is that overall GU is not bullish anymore. It's saying that the market can potentially be changing structure. Now, not only that, but we created a ton of liquidity right over here. And for the people who finished the entire course by now, they know that if there's liquidity above or below your areas of interest, that increases the probability of price doing your thing. So right here, we can see that the market created a really clean last institutional up candle before the move down. And if you look at it, this is also that major move down that broke structure over here. That's that major move down that broke structure. So we have multiple confirmations for this specific area right here. Not only that, but we also cleared a bunch of liquidity inside of this area. So we can see that this move stopped out all these retail sellers. We had a touch of resistance here, you know, another touch right here, another touch right here, and another touch right here. The market went above it and stopped it out. So for the people who watch the higher probability institutional candles and which one is, you know, better and which one isn't, they would know that an institutional candle that sweeps liquidity is really, really strong. Now, not only that, but once again, we have imbalance inside of this level right here. And we're expecting price to come back, tap it in. So we have liquidity imbalance. Can you go back to EA market real quick? Once you go through the other. Yeah, I'll do that. So yeah, we have IPA, we have liquidity. We have IPA, we have liquidity, we have an institutional candle, we have that break of structure. At this point, we're just waiting for GU to come into this level right here. And once it does do that, we're going to be looking for sellable opportunities to target the next low. So either we can be targeting this area right over here, right, and I'll tell you guys why. On the 1 hour, there's a clean institutional candle right here, right, and this one also gave us a pretty nice impulsive move up. So we could either target here, or you could target you know, even lower wherever the IPA lies. So we can see that there's a bunch of momentumous moves up here. If we go down to the daily time frame, we can look at the IPA that, you know, lies right here. So we can either target the next IPA, which would be in this area, and right below that IPA we have an institutional candle right over here. So we could target here, or we could target here. I'm just going to look for targets up to here for a nice 10 to 1, 223 pips. So I hope this one makes sense. GU, as we now on OB for up move. So right now we're actually looking for sells on GBP USD. This is a nice clean institutional up candle before the move down that broke structure. And then we're expecting price to come back into this level, tap into it, and then from there target the next low over here. Hope that makes sense. Yeah. And then the last pair that we're looking for is NZD USD. Let's go over this one. NZD USD. Guys, if the zoom does end, don't worry, I'm gonna redo the zoom and we'll create a new one. So NZD USD, let's go on to the daily time frame. Let's delete everything. Daily time frame wise, NZD USD. Market is overall moving. Oh snap, really? Oh, okay, cool. I didn't know that. That's good. That's good. All right, perfect. I was stressing about that low key, but all right, perfect. So we can see NZD USD, the market was moving pretty bullish. We had this high, higher low, higher high structure. Pretty clean. Everyone knows that. Clean structure. Now right here, market ends up selling off. We have our first major impulsive move down. We end up selling off a ton. Not only that, but we break structure. Look at that really clean break of structure we have. We have that clean break of structure, and like I said, we're looking for the price to retrace into the open of that major impulsive move down. Now let's see if we have any confirmation for this institutional candle right here. One, this institutional candle swept a bunch of liquidity, right? We had equal highs resting right here. Sellers were selling, sellers were selling, sellers were selling, and then boom, the market breaks above, stops out all those sellers, and then the market continues down. So this institutional candle swept liquidity, which increases the probability of this. Now, obviously, this is way too big. We can't enter right here, right, with the stop loss above. That's 118 pips. All right, no one has the money for that. So at this point, we're on the 4-hour time frame, and we're just going to refine it. So we're refining this up to this last institutional up candle before the move down. There we go. We refined it, and boom. So now we have our sell. We have our sell for why we're looking for sells here. Hey bro, understood from the previous example that you can use the IP as a zone for TP. Is it IPA works as a rejection zone or price pass through it? Price will pass through it. The only time you're looking for IP as a rejection zone is if it's inside of our POI. So for example, right here we have an order block, right? What we're expecting is price to come into our order block and then price sell off. If we have imbalance somewhere inside of this order block, that increases the probability of price, rejecting inside of it. But for example, over here, we have clean imbalance. That doesn't mean that price is going to come into here and fall. It just means price is going to break past it most likely. The wick into the OB doesn't matter. So the wick into the OB doesn't matter. No. So right here, you see this wick, right? So people say this is mitigated. No, it isn't. In my opinion, it's not mitigated at all. In order for an order block to be fully mitigated, price needs to move away from it and then test it. This wick right here, this is not mitigation at all. It's just price action being price action. But let's continue with this. So once we did establish where we're looking to buy, or rather sell at, one thing we can notice is that there's liquidity resting right over here. We have equal highs resting all over here. We have equal highs of the sellers. That means there's money resting above. Now there's money resting above, which means that price has a reason for why it needs to come back up to take out all that money, to liquidate all those positions. Now we also have an institutional candle over here. So that means when price does go up, to fill in the imbalance, to fill in all those liquidity, to test our institutional candle, we have a reason for why price needs to come back up and test it, right? So our stop loss is just going to be the high, and then TP is going to be the next low right over here. We're literally just targeting the next impulsive low. Now, this is just an example of what NZD USD could do. Let's see what you guys said. Price looks to want to go down first to the OB below and then go up. Agree. Yeah, that's what I was actually about to go talk about that. So one more thing we can see is that there's money. I like that you guys are noticing things before I even notice it. It's good to see that. I like that you guys are you guys have that eye for detail. But right here we see that there's a bunch of liquidity. Now the market has to go down to take out those lows. It just has to. Right now we can also see that the market had this small little low, lower, high, low, lower, high, lower, low phase, and then the market kind of broke above it with this wick. Now, if you go down to the 1 hour, I think the candle did close above it. Yeah, so the candle did close above it right here. So it's considered as a break of structure. It's technically considered as a break of structure, right? And we're looking for the cause.BOS. And the cause.BOS is this major impulsive move up right here. We have this major impulsive move up. We can identify that by all the momentum and all the crazy price action that was created after it. And at this point, price looks like it wants to go down to do what? To retest this institutional candle right here. Last bearish candle before the major move up, or this institutional candle right here. Now this is a really big zone that we're eventually gonna have to refine. 28 pips, we could refine that. Let's go down to the 3 hour, and boom, we refined it. So we could either do this. We could either look for the buy into our sell zone, so that means we'd be buying at this price point right here with a stop loss for about 10 pips, and then TP just the next high. And same thing for this one, right? We'd be looking to enter right over here, stop loss at the low, and TP the next high. So we could either take the buy up to our sell zone and then take the sell all the way back down, or what we could do is, well, it depends on what the market does, obviously. If the market doesn't take out these lows over here and it just completely goes up, then that means that most likely prices, has long-term objectives to go lower. Because think about this. Imagine if price just does something like this. If it goes up, what did it do? It just left all this liquidity over here to get grabbed, right? So that gives us a reason for why price needs to go down. So that means that if we were selling over here, which we are in this case, we would just target the next level of liquidity right over here, because price is going to have to take it out. And yeah. Price looks more. Love that indicator. Yeah, it's not an indicator, it's rather a tool, but yeah, it's pretty cool, bro. So that's basically all I'm seeing for the week. Do you guys have any questions? Oh yeah, you want me to go over Euro AUD, correct? Let me go over that really quickly. So I'll go over this quick time. So Euro AUD, we can see that the market was overall moving pretty bullish, right? We had on the daily time frame, we're pretty bullish on this, right? We can see that bullish structure. Now, as soon as price came up to here, the market ended up selling off a bunch, breaking past a previous higher low. Now, this break of structure, what this tells you is that the market was so bearish over here, banks were selling, that they're breaking previous buy side structure, and now they're creating sell side structure. Now, like I said, focus on the open of that major impulsive move down, that broke structure, and look for that institutional candle there. So from there, we went down to the 45, right? Because we went down to every single time frame, and the 45-minute looked the cleanest. On the 45-minute, we have a clean institutional up candle before the move down, and then we have another clean institutional up candle before the move down. So we're selling, or we're using these areas over here to sell down into our long-term price points of liquidity, which is right over here. Hope that made sense. So basically, that's all I'm seeing for this week. I'm going to be sending all these setups to the chat as well, so don't worry about that. I'm sending it all to the chat. Great, thanks. So at this point, I want one of you guys to share your screen, unmute your mic, and take me through whatever you guys are seeing. I have a question about OB and the wick with stop loss. Yeah, go ahead, sure. What's your question?
All right, so I have my mic. Can you hear me?
Yeah, I could hear.
So you see how, like, on E, if you just zoom in and to that top order block, the second one rather, doesn't make a difference.
Yeah.
Right there. So you see all those wicks above there? Like sometimes this is why I always include the wicks with my zones, because how do you deal with sometimes the order block is valid, but it will wick above it and then come back down, and it validates the order block. But sometimes I find that I get stopped out because it just kind of like wick above it. And then when I see certain videos, it seems like if it is the proper order block, it really never does. So sometimes I'm saying, well, is it really the right order block that I should have used? Because it usually doesn't wick above, at least according to the videos that I watch from you guys and different people that do order block. If you understand what I'm saying?
No, I get you. Honestly, it happened to me on gold. I'm not sure if you saw the chat, but last week it happened to me on gold. So generally, from my experience, this happens a lot of the time when the order block isn't clean, right? So for example, you can see this is a pretty clean one. You have a nice, thick institutional up candle before the move down, right? Now, for example, this one, it's not clean at all. There's a lot of wick here. It's not the cleanest. Most likely, in this case, I wouldn't expect price to wick above unless price is making a run towards this high. Now, this is where confirmation comes in, because we're not looking to enter right away. Rather, we're waiting for price to come into our level. Once price comes into our institutional, candle or level, we're looking for that lower time frame confirmation to actually, capitalize on opportunities to enter for that sell. So that's, now I won't lie, I low-key don't like doing that, because it does, sometimes you'll miss out on opportunities because price won't pull back, or sometimes price just, ends up selling off right away. But it helps you avoid those really those really annoying losses, getting whipped out and the market going down like that. So one more thing you could do is, if you don't like looking for confirmation, is you might want to raise your stop loss. That's just the truth. You
Yeah.
might want to put your
I normally
stop
put
loss.
I normally put mine like really at that zone, that whole consolidation area.
Yeah,
But then
yeah.
like see that you like that the one that OB that you said is not clean.
This one,
Like
right?
so in my mind I'm like it could technically wick right there and then drop down, which is basically validating both of the order blocks because they haven't been um respected at all. And so
Yeah.
when I'm looking at that from that perspective, when I go down, I try to find the clean ones. I would see that one right above it, and I'm like, that could be a wick situation.
Yeah, no, I get you. That honestly, that makes sense. Honestly, the reason I wouldn't worry about that on this case is because one, like, there's no imbalance really.
Right, right,
There's literally like it's just consolidative. So if the market were to wick above this high right here, most likely it's going to be tapping into this institutional candle next, right? But like for example, let's go to the 1 hour. Here, there's a ton of imbalance, right? We can see that price has a reason for why it needs to come up over here. Now, above that imbalance, there's nothing. All there is there's a institutional candle right here, and there's an
right.
institutional candle right here. If there was imbalance, like maybe over here, then I'd be considering like, okay, yeah, maybe I might want to raise my stop loss a bit, or maybe I'll raise my entry. But because there's no imbalance, really, all I would say is either price is gonna react off of this one right here, or price is gonna go towards this one over here. But either way, confirmation wise, if you do wait for that confirmation, you'll get that upper hand, and 9 out of 10 times you won't end up getting stopped out. That,
Thanks, sir.
that make sense?
Mhm.
All right,
Gotcha.
perfect. I have a question about the micro shifting confirmation, bro. Yeah, go ahead. What's up? After this question, let's do some. I want you guys to show some, trade ideas. Show me what you guys are seeing. We can get this going. Ask you can unmute your mic, by the way, if you want to ask a question. You guys don't have to always text. Nah, I can't hear you. Can you guys hear him or not? Oh, Natasha, you want to share your screen? Show us the setup?
Sure. Yeah. Screen. You have to give me permission.
Oh, okay, give me a sec. Alright, try now.
Screen. You got it?
Yeah, I can see you now. Perfect.
Okay. So what I got here is pretty much UCAD is watching it. So I saw that from a daily perspective. If I go to the daily, I'm looking at lower lows, low highs. But I am starting to think that it's probably getting ready. Well, down here, it may come down to this area. But since it's giving me some consolidation, accumulation, whichever way you want to call it, and it's starting to make higher lows, I'm starting to think that the trend is about to change. But from a technical perspective, from a micro or macro structure, a major market structure, it still is bearish because this is the previous lower high, and then this right here is the previous lower low. So until this actually is broken, technically I should be looking for sales. But I did notice that we did come into this order block here. Just mark it up here. Sorry, that's my roommate. She's talking. She's on a Zoom call herself. So it did come up into this order block here. Matter of fact, let me just close my door. Sorry about that.
No, all good, all good.
All right, so it did come up into this order block here, and I think I was watching this because I'm never really at my computer for confirmations because I work and I'm always doing different. I have a lot of different responsibilities.
Yeah.
But since I was home that day, I decided to look for confirmation. I was on the 1 minute, and to me, it seemed like it did do a confirmation, but then it just kept going up. So that's another story. But anyway, so it came into this order block here, and it's starting to pull back. And so since even though from a major market structure, we are in a downtrend, I do see some bullish pressure come in from a price action or a micro structure, which usually happens first before it happens on the major. And so I would be looking to buy at this point here if we make another higher low.
Okay.
But even if we come down into this area here, which is the one that broke from this 4-hour perspective, this market structure here, I will be buying here. Here's my liquidity here. Here's my liquidity here that's taken out. This order block here that's creating is taking out this liquidity. So that is what I'm actually looking at. I do see imbalance here. So if I am going to buy, I'm going to buy up until this order block here, or minimum the imbalance fill, which is what how I mark
Yeah,
mine
that's
off,
clean. That's
the
clean.
imbalance fill there.
Yeah.
But so I'm looking at buys for this, although I know that technically we are not confirmed to be bullish, but I see the structure is starting to shift from the higher lows being formed.
Clean, clean. I like that. Wait, can you go to the 1 minute and show me the candles in that zone? Okay, let me just look at that. Oh, there was
I'm not sure if
actually
this is the chart I sent you. I'm not sure this was the chart I sent you because I was sitting looking at this 1 minute and looking at the structure change and so forth. But what it did, from what I saw, it may have been this pair, but it came down and it broke structure. And so I'll say, okay, well, let's look where the last support level was. It came up and then it shot all the way up. And I was like, okay, maybe I don't really understand structure the way I thought I did. And so,
Yeah, nah, the 1 minute is the worst. It can get
yeah,
so
I
annoying.
know.
It can get so annoying. But it's clean. Like it pulled back to that institutional candle and sold off perfectly.
Now, here's the question for you your confirmation. So I can clearly see that where it meets, the low highs and lower lows.
Yeah.
Because I come from retail, and I know the market making method and so forth, and trying to catch the highs. So technically, right here for me, this would be the actual breaker structure.
Yeah.
Once it come down in here, and then but see here, to me, let me just go up a little high as far as order blocks are concerned, and actually it being clean. So it comes up into here, which I guess it would be this order block, but then this order block looks like it has been again, it had been violated because it came and this one broke, but it came back into it. And then this is what I said to you in the chat. So you said something in one of your earlier videos, like when I first started watching, which I never thought of, is that when you look at structure, so you have the first order block and it comes back in, and then it breaks and comes down. If it doesn't fully break the next major structural level, basically it's not finished, so it goes back into that order block to grab more orders.
Yeah, yeah. I remember that. I remember
Remember,
that.
so that right there. So when I look at once price comes into it and it doesn't do this major move, I'm always saying it's coming back into the order block. So for
100%.
me,
100%.
one tap is not violated, and if it comes back, it's like okay, because and usually that second or maybe that third tap, but that second tap, as you can see, is the one that drops the whole thing.
Perfect. Perfect explanation. One more thing. This is the secret that I love using. Do you guys use the 2 minute time frame, 3 minute, like the odd numbers, like the 4 minute,
Going to the
6 minute,
so
all
I
those
got
different
all
time frames?
four, and I will. Hello, hello everyone.
What's
Hey
good,
Rayon,
brother?
can you put yourself on mute?
All right, well, yeah, yeah. So, do you guys use do you use by any chance? Do you ever use like the odd numbers, like the 16 hour, the 3 hour, the 3 minute, the 2 minute, the 4 minute? Make your way
Yeah, 3 minutes
down.
I think is kind of cleaner than the 1 minute, to be honest with you.
Exactly. There we go. There we go. So right there, that institutional candle, the one that you're the one before it got tapped into.
This
So
one?
the one above that?
This
This
one?
one right here, yeah. So in my opinion, I would be focusing there because like you said, if that was that breakup structure that we did see, it didn't really give us that major move down that we're expecting. So like you
Right.
said, that means price is going back up to accumulate or pick up more orders. And then from there, you can see price ended up like, just doing its thing and falling immediately. So that's the beauty of confirmation when you have a trade because one, you're minimizing your risk. That's like, I think that's would be like a 2 to 3 pip stop loss after you count for spread, which is, amazing, risk management wise. And your TP, it doesn't even need to be the next low on the 4 hour. You could just target the next 1 minute low, and that's still a really good amount of pips right there.
Now here's my question with this last supply. Like if this is the one that break. This is I guess UTAD if this was a Wyckoff or whatever.
Yeah.
But I always look at this move right here. I would just call it the UTAD period, whether I see a Wyckoff or not. I'm like, oh, there's my UTAD. So when it comes back up, as you see, it did not come back up into this order block that really made this whole move here. It kind of barely touched into this one. I would say, wouldn't you say this one was the cleaner one than this one?
Go down, yeah. Well, from my perspective, yeah. But go down to the 4 minute.
4 minutes.
Yeah, I usually check every single time from then. Let's go down to the 5 minute, 6 minute.
You see how it still doesn't.
Yeah.
This
Really, it just looks like it kind of generated a little bit of liquidity, but yeah. I kind of see that. Honestly,
I
what
mean,
these
no market's perfect, so I'm not looking for perfection. But it's probably one of those situations where it's like you missed that one,
yeah.
not your chips,
Yeah,
not your
honestly,
pips.
honestly, it looks clean. That level looks clean, but just because price didn't respect that and then it made another huge drop, I would focus on that one right there that you're highlighted on.
This one,
Down. You know, see
this
that?
one, this one. Oh, this one.
No, right towards the left or right towards the right where the market fully dropped. You see that last bullish
Oh,
candle?
right now, yeah.
Yeah,
I mean, right now, currently, yeah. But I was
yeah, yeah.
just looking from the perspective if this didn't happen yet. This is
Oh,
what I would be
yeah.
looking at, and I
I'd be
noticed
looking
that
at
it
there
didn't.
too. Yeah, 100%.
Oh, okay, so sometimes you're just missing them basically. Because sometimes
Basically,
I
yeah.
say to myself, well, maybe I picked the wrong one, and I'm really start analyzing. Maybe but I guess it's just the market just didn't do it.
Now, I would focus on that one too. Now, something else I'm gonna make a video on this for the course, like hopefully in a week. I'm just back testing it. But one thing I'm slowly realizing is when you have that confirmation that the micro time frame, such as the 1 minute, the 2 minute, the 3 minute, is in fact moving in your direction with the higher time frames, instead of looking for that pullback towards the OB, what you could generally do is enter right away for that sell with a pretty deep stop loss. But because you're already in your zone, your stop loss shouldn't be too big, obviously. Now, that way you avoid missing out on the trade. Your stop loss isn't too big. And three, you actually catch that move down. But I'm back
Mm.
testing this a lot. I don't want to give you guys something that doesn't work, obviously. So I'm making this video just now in a week. Stay tuned for that.
I mean, technically, this is the move that breaks the structure. So this
Yeah.
is the order block that we will be looking at because it actually comes back into the zone. So I mean, from a technical standpoint, this would be the correct your confirmational move, your microstructure. This would be the correct one.
Yeah,
This would
100%. 100%. Anyone have any questions? Make
look
sure
at
you
all
guys have
that.
any Q&As, any questions at all. Unmute your mic, ask me anything you guys want. Oh, you said USD
Yeah, can
CAD
you hear
and
me now?
yeah, I could hear you. What's up?
Hey, I'm sorry, I don't know what happened earlier.
All good.
Yeah, how you doing?
I'm good, brother. How are you?
I'm good, good. Hey, I do have a question. Maybe I can share my screen here real quick.
Yeah, go for it.
Let me just make sure. Can just move this around? And can put it here. Okay, just give me a sec here. Okay.
I'm recording, right? Yeah, I'm recording. You know where the option is?
Yeah, I know. I'm just looking for. Okay, it's not this one. It's this one. Oh, okay, let me just put it aside because I thought I could just share it like that, but it's not letting me choose. So. Oh, here it is. I guess it's this one.
All right, but let's do this.
Yeah. Can you see it?
Yeah, I can see your screen.
Not really. Okay, you see it now, right?
Yeah.
You see do you see this chart?
Yeah, I see your chart.
Okay, the question is then about on that setup that we had for yesterday for EJ.
Yeah.
My question pretty much is because this thing was just going up and down like crazy, right?
Yeah.
Then my question is, once we get the price going down to our auto block zone, right? That we just do the zoom in to the 1 minute or lower time frames to check on the switch of the micro, right?
Yeah.
Like, let's say for instance we got a BOS here, and then let's say we get another one, right?
Mm-hmm.
Like, what if the price really breaks one BOS but not a second one, and then start doing this? Like, how can we be for sure when to consider that last push before we? Do you get my question? Maybe not.
Kind of. So you're saying when there's multiple breaks of structures, which one do you know which one's the proper one?
Right. Let's say, for instance, let's say the price was going down here, right?
Yeah.
Right. Then he gave me this break of a structure right here. You see?
Yeah.
So then I will then, based on the cursor, will take like this one here, right?
Mm-hmm.
Like this will be my order block right here.
Yeah.
So I can get in. But what if the price actually comes back in and then breaks that? You see that? It went below. So would this be invalidated, this BOS here, or how would I
Oh,
take
okay.
it?
Okay, I get what you mean. So,
Would I take then this one down here?
okay, so basically the break of structure, all it is just
Right,
breaking previous bearish structure. That's it. So for example, you see how you have your lower lows, lower highs, right? You know that last lower high
right,
that the
right,
market created lower low and then it broke it. The break of structure is still
right.
valid. It's just about the institutional candle you marked up. So from here you can see you have two POIs, your two red zones. Because price broke
Right.
past your first red zone, that doesn't necessarily mean that the break of structure is
This
invalid.
one.
Yeah, yeah. That doesn't mean that the break of structure isn't invalid. It just means our institutional candle we picked wasn't of interest to the banks or institutions.
Right,
So the confirmation was there, right? We had the higher time frame confirmation, we had the lower time frame confirmation, but I guess the
right.
banks just had different ulterior motives to bring the price lower, and that's just how the game is. Sometimes we can't win them all,
Okay.
but you can see that even though, like for example, on a different pair like GP JPY, I've had
Hmm.
exact one of these, one-to-one setups looking the exact same and they played out perfectly. But the first zone that you marked up, it always gets broken. That just means that
Mm.
you're relying on your second zone to get picked up. Now, whether your second zone plays out or not, that will give you that full confirmation if price is going to continue going down or not. Plus, the
Okay.
major structure, exactly, yeah, the major structure is bearish as well.
So then, when you see these kind of things here, like creating some type of liquidity, right? So
Yeah,
that means then that we still cannot do anything because that means that it actually needs to be broken too or taken too as well, right?
yeah. Sorry, wait, what do you mean by that? Could you
And
repeat
then,
that?
all right, for instance, like you say in this 1 minute time frame, right? You see that the prices started like getting stuck here, like it was getting here, going back up, getting
Yeah,
here, going back up, and so on. So I understand that when that happens is that it is creating liquidity, right?
yeah,
So then you get buyers buying here, putting the stop loss here, and then they just the liquidity gets taken, right? Is
yeah,
that right?
yeah.
Or that applies for larger time frames.
That
That
apply
applies for the one
liquidity.
minute too.
Yeah, liquidity applies for all the time frames. Liquidity, the concept
Okay,
of liquidity will never change. Every single time frame is the
okay,
same. The 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, the hour, the daily, the monthly. It's all the same. It's just about the
okay,
timing of when it's gonna get taken and how quickly and etc.
right. So then by the time that the price breaks this OB I marked up here is gone, right? I have to zoom out and then keep looking to the left to see what's next, right?
Basically, yeah. So
Like
once
if
price breaks,
this one got if this one, mm-hmm,
oh, no, no, go ahead, finish. Go ahead.
go ahead.
Oh, okay, so
No, no, my question was that when this get broken, right?
yeah.
Then there is no hope of the price coming back up or anything. We just have to just let it go and then wait until it gets to the next level, right?
Once your stop loss is hit, never chase the trade. Just call it a day and look for other points of
Okay.
interest. Because if your entire, for example, our order block that we called out last week for EJ, the entire OB itself
Mm-hmm.
was broken. So that means that our institutional candle is invalid because the higher time frame
Okay.
OB price closed below it. So now as you can see, you have your other institutional candle marked down at 132,618. Now that's a
This
valid
one.
level. Yeah, that one. Now that's a valid level price can make its way down to.
Okay.
So yeah, hopefully that answered your question.
Right. Right. Because I got confused when I saw the price going down. Like, well, then we wait until the next one, right?
Yeah.
But then I see the price pulling back up. I'm like, well, look, it's coming back or what? So when it's like that, we just let it go.
Just let it go. Don't chase the trade. Let the trade be. Let it go.
All right.
Because long term, like think about it. You see how price does that all the time. It breaks it, comes back, breaks it, comes back. Just move on to the
Mm-hmm.
next POI and just think long term rather than short term.
Gotcha.
Yeah. But yo,
All right,
anyone,
man.
any
Thank
guys
you
have
very much, man.
yeah, anytime, brother. If you guys have any more questions, 'cause I'm calling this soon. It's been like a hour.
Yeah. Hi.
What's good?
Sorry to be late and noisy, guys.
Nah, all good, all good, all good. How's the
All right,
day?
cool. So I just want to run down. I just want to give a rundown on US 30.
Yo, okay, okay.
All right, cool. So I'm just gonna share my screen, right?
All right, brother.
Let me know when you can see my screen, please.
Yeah, I could see it.
All right, cool. So what I'm looking at for the 4 hour, right, is overall we're looking at overall bullish momentum
Okay.
with a deep pullback, right?
Yeah.
So then, when I go down to the 4 hour, which is pretty much the focal point of my um, focal point right now, because the reason why I say focal point is it makes sense in going further down, time frame wise. So I'm seeing there is that prices in a unique spot where there are liquidity that's left at the top,
Yeah.
as well as liquidity to be tapped into in the bottom. So me personally, I like what I'm seeing. So what I'm seeing here is that we have the last point of interest right here, where price went into this order block.
Yeah.
Uh, hello.
Yeah, I can hear you. Go ahead.
Yeah. So what I'm seeing here also is that this order block was used up already.
Okay.
So I'm pretty much looking at 2 order blocks that were not used up, right?
Okay.
So my question is just that, well, from my perspective, being that I'm a learner, and I'm fairly new to the game,
Yeah.
but I see there's a huge liquidity right here. I know for sure this is, well, not for sure, but I have a good feeling that this is gonna break to tap into the liquidity here.
Yeah.
What I want to find out is, from your experience, would this be a more appealing OB, given that right here will contain a considerable amount of
Yeah.
liquidity?
Yeah, I get it. Zoom out a little bit. Yeah, zoom out. So I don't trade US 30 in all honesty, but from a technical perspective, the liquidity is there. The liquidity is extremely clean, and we all know with commodities and indices and all those, you always want to buy everyone sell. So the POI you marked up, in my opinion, I would say that the lower order block that you marked up is a lot more appealing and looks more, nicer. And obviously too, the deeper institutional candle is a little bit better than the one above.
Right.
Because it's more discounted, it gives a more better price to enter on them.
Yeah, I mean, that was my feeling pretty much.
Yeah.
Because what I'm seeing right here is, I feel like it's gonna give one of these crazy looks into this right here.
Yeah. Yeah.
So I feel like a look down right here is gonna provide a very fast.
Definitely, I like the analysis. Looks really clean, bro. Like, you marked your order blocks really nicely. The break of structure is there. One thing that I do want to, keep in mind is that break of structure you have is not a completely reliable break of structure. Can I show you?
So you want to see it right here, right?
Yeah. Can I share my screen and show you?
Yeah. Let me stop you.
Alright, bet. Alright, guys see my screen? So, like I said, when you're looking at breaks of structure, in order for a lower high or a lower low to be confirmed, for example, we have a low, we have a lower high. Now, this is not a lower high until price creates a lower low. Right? Now, in your case, the market pushed up and they gave you a break of structure right here. Mark that up, BOS. Now, once you got that break of structure, price wicked back down to the open of the institutional candle right here. We saw that. It wicked back down. Now, from here, price didn't really give you another break of structure. It just broke above this area, which is rather a continuation of structure. So it wouldn't be considered a BOS. Let me actually go on US 30 and show you what I'm talking about.
Okay.
What time frame were you on? You're on the 4 hour, right?
4, yeah. 4.
So yeah, right here. So we can see that the market pushed down right here, and then it pushed up, and then created a higher low, and then it pushed up again. In order for this to be considered as a break of structure, it would need to create a a lower low. It didn't do that. It just created a low, a high, another low, and then it pushed up like that. In order for this to be considered as a break of structure, it would need to create a lower low and then the market break above it. So rather, this is just a trading range. So the real trading range lies from this high down to this low. Now, the liquidity is there. It's clean. You can see that you have your liquidity area right over here marked up. And you also have your expansion move towards the upside that rather gave you a continuation of structure. So it's still there. The confirmation is still there. The institutional candle is valid. The structure is still there. So I would take the trade. but you have to make sure that you risk less on this trade because one, it's not the highest probability, right? Because this isn't really the proper break of structure. Two, when you don't have the structure by your side and you don't have the proper confirmation, it's overall more riskier and psychologically better to don't use the biggest lot size, use a better lot size,
I have a question there, right?
Yeah.
So this is my thought process why I didn't see a continuation of trends within this range, right? And of course, going back to your lesson on the whole Michael versus Michael, right? So within this range, I was range itself. So what I'm seeing is a bearish structure first, right? So we have a sharp pull down, right?
Yeah.
And then a lower high. So when that lower high was broken, that was pretty much the thought process from a micro perspective. Within that range, that was my thought process in terms of the continuation of the breakup structure per se. So what I'm thinking is that when it broke above that lower high, it sort of shifted within that micro range to a bullish there.
Okay, yeah, I get what you're saying. That makes more sense. Yeah. So yeah, like really, honestly, like I never ever ever sell US 30 or any of these.
Right.
Never, ever. Like look at this, just like imagine selling all this big move up. Like it's like
Yeah. I saw selling opportunities and I'm like, no, I'm not gonna do it.
Yeah, it's crazy. Like the opportunity is there, the confirmation is there, but then you take it and then your account is gone. It's a crazy thing. It's crazy thing, but the setup you had it looks perfect. Confirmation is there. Just be wary about the risk on it, and overall, it looks really clean to me.
Okay. So I'm waiting for I'm waiting for the price to drop within the zone, and then to buy it up.
Yeah, no, that's what I'm saying. Yeah, it makes sense. I like it.
Yeah. So that's pretty much my input. I'm looking at UCAD. Actually. I made an otherwise entry with UCAD, but I got a good feeling on it. Quick question: what's your take on the DXY in terms of the sharp uptrending? Do you see like
DXY?
Yeah.
Yo, honestly, DXY is just moved by fundamentals. US is in shambles. It's like the worst. Fundamentally, economically, it's horrible right now.
Right.
Technically wise, I can do my analysis on it. Technically wise, you can kind of see DXY was moving pretty bearish, lower lows, lower highs, right? And then the market ends up breaking above it right here. So we have a pretty clean break of structure on the DXY. And then once again, look at this. Price pulls back to the open of that institutional candle. That was the cause of that break of structure, and then continues up once again. Now, in my opinion, I would see DXY rallying up to either one of these levels. Either over here or over here. And let me tell you why. So these are basically the last impulsive moves down. These are our macro levels of big impulsive moves down. So most likely DXY is coming back up to retrace to tap into either an institutional candle in here, or maybe it'll come back up to fill in some imbalance that lies right over here, or tap into this IC and then continue its bearish structure. So overall, I do see DXY going up for a little bit, but either it's going to come to 90,907 or 91,379. And then from there, God knows what's going to happen.
Okay.
Yeah. But yeah, do you guys have any more questions? Like if you have any more questions, about to end this soon. It's been about an hour. I gotta go outside. That was amazing. Alright guys, if that's basically it, I hope this was pretty educational, and I'm gonna be posting this on the course, so I'll post the Zoom link just now on the course. But anyways, everyone take care, prepare for next week. I hope this one was good. I'll send all this charts this week or in the Discord. Alright guys, take care guys.
Have a good one, man.
You too. Bye bye.
Bye bye.
Let's go.